great to have your company on this 14th day of November. My name's Jessica Amir, market strategist with Moomoo. Happy Friday. So the signs are here that markets could crash. But could this be an opportunity for you? Well, it's probably going to be an opportunity for the brave. Here's what you need to know. So why are markets appearing to crash, and what really triggered the selling overnight? Well, we did see the US stock market's benchmark index, the broad S&P 500, that critically fell 1.7%, and now it's wiped out November's gain and down 3% from its record all-time high. But the pin-up index that I speak about a lot, the AI-related index, that's a Nasdaq 100, the tracker of the biggest tech stocks in the US, that closed down 2.1%. It's now down almost 5% from its record all-time high. So it's looking shaky, bracing for lower levels. And the reason is because we're about to be hit by a barrage of economic data after the US government reopens from its record-long shutdown. And what this means is US interest rates might not be cut. So that is what markets are digesting. But it's not all doom and gloom. There's always a market that is charging somewhere, and commodities seem to be benefiting. Perhaps it's from the pickup in AI and EV demand, and we're seeing lithium stocks also move higher as well. Specifically, the Albemarle, well, that's a lithium giant, Albemarle. Their stock rose about 4% overnight, but we also saw other commodity stocks, I guess, holding steady, and that's probably because copper has risen 1%. It's across 4% this month. Aluminum, or aluminium, however you want to pronounce it, it also rallied just shy of 1%, and it's also up about 5% this month. But today's focus is on the potential crash. Will it happen? But this is why the rich will probably get richer if we do see a crash, and how you can too. But first, we have to start by pausing and thinking about what we use to track market fear, and that's the VIX. So we speak about this a lot here. You can track that on Moomoo just by typing in VIX. So what happened was we saw the VIX, which tracks market fear, when it's rising, fear is rising, and we saw it rise 14% overnight. Now, this basically suggests that investors are fearful, fear is rising, investors are bracing for a pullback. So keep your eye on this. If it rises further next week, that means tech stocks, small caps, small companies, that is, and Bitcoin and interest rate sensitive related sectors of the market, as well as obviously those companies and sectors that typically carry higher debt, well, they are going to be pressured. So why is this happening? Well, as we said, the chances of a rate cut by the US Central Bank, the Federal Reserve, are reducing. And so overnight, what happened was the chances of a rate cut dropped from 67% down to 50%. So it's a 50-50 coin cost throw if we see the most important bank of the world, the Federal Reserve, cut interest rates next week. Secondly, the other thing that's spooking investors right now is that Americans are in mortgage distress. We saw some fresh data come out suggesting that's the case overnight. And the third reason is that markets are looking shaky is because tech companies, some carrying higher debt levels, they will basically come under pressure if we don't see the Federal Reserve cut interest rates. So the market needs to adjust for that, and that's very normal. As I always say, markets don't go up in a straight line. So the question is, what do you do now? Well, next week's data, the US economic data, and secondly, Nvidia earnings, these could be make or break points for the market. They could save the day, but if they're weaker than expected, markets could crash. So what we have to think of right now is why we're on shaky ground. And if we bring in the technical indicators for the Nasdaq 100 and the S&P 500, both of those technical indicators for those key indices are suggesting, hey, we've got pressure here. Pressure is on for the downside, and that means selling is greater than buying. And that's why I'm saying momentum is to the downside. So any weak data will push markets lower here. So let's bring in Nvidia. Nvidia, obviously the world's biggest company, they report earnings next week. If we get weaker than expected results, or if the market doesn't like it, we do know that Nvidia usually delivers better than expected earnings results and a better than expected earnings report card and outlook, but their shares usually fall. This time, options pricing suggests that their stock could rise or fall 6%. So next week, if the market does not like Nvidia's results and outlook, their stock could fall 6%. And obviously that could bring down the entire stock market because Nvidia is the largest stock in the world and the most bought company in the world as well. And it makes up a very, very big chunk of the Nasdaq 100 and S&P 500 ETFs, as well as a slice of your superannuation fund. So this is something to consider. However, inversely, what about if the market says, hey, we actually like this report card and their shares rally 6% as options markets suggest? Well, maybe we'll see markets rally on up. So that's something for you to consider. We don't really know where we're going here. But what investors are doing right now and what could you do right now? Well, you could potentially sell and take some profits from stocks that have done really well over the past year, just in case we get bad news. No one likes bad surprises after all. So you have to consider what investments could come under pressure next week and beyond. Well, just to reiterate, we've said it many times, but it's the tech stocks, consumer spending facing companies, and other interest rate sensitive companies. So specifically, we saw these sectors fall over 2% overnight. Also, smaller companies that track the Russell 2000, those related ETFs and investments could also come under pressure. And of course, Bitcoin related stocks. So MicroStrategy is a stock I want to bring in the fold that fell 7% overnight. Now, MicroStrategy, potato, they're the world's biggest holder of Bitcoin. And what is happening is Bitcoin is now crumbling. So Bitcoin is down 22%. So that means it's in a bear market, and it's quickly gone into a bear market after falling over the past 7 weeks. So it's now at its lowest level since May, just above 98,000 US dollars. Now, concern is that Bitcoin will probably continue to fall, and that's because we've got institutions selling Bitcoin ETFs for 2 straight weeks. And this is why Bitcoin's coming under pressure, and the world's biggest corporate holder of Bitcoin, MicroStrategy or Strategy, they're under pressure as well. But anything Bitcoin related is also crumbling as well. Think about Coinbase, their stock got crushed overnight, so did Circle. But I will say fortune favors the brave. And Shelby Davis said this because there's a lot to be said about buying the dip, and in market pullbacks, we can often make most of our money. The reason I'm saying this is because every single market crash or pullback that we've had over the last 3 years of this bull market, so a pullback of 5 to 15%, the Nasdaq 100 and the S&P 500 have always recovered. So there's a lot to be said about buying into market crashes if you take a long-term approach. So let's just bring in 3 investments to add to your watch list now. Let's kick off with Amazon. So Amazon, their stock fell almost 3% overnight amid the tech sell-off. But what is ahead is some good catalysts. We've got on the retail side of their business, them being a key beneficiary of Black Friday and a Christmas coming up. But AI is probably going to help this company in its busiest shopping season. And Rufus, that's their Amazon AI shopping assistant, that'll be really tested and proven to potentially be boosting sales. Now, Rufus will be complemented by Amazon's most recent Help Me Decide AI tool. Now, Amazon was reiterated by several analysts as a buy overnight, including Wedbush and Morgan Stanley. And the reason for this is because earnings growth is continued to grow at a pace of knots over the coming years and into the new year. So that's something for you to consider. Do you potentially buy the dip or wait for the dust to settle, see what happens over the next couple of trading sessions maybe? That's a stock for you to watch. Tencent reported results overnight. So this is the biggest company in Hong Kong's Hang Seng. So it's the biggest company basically in China's market. And they reported better than expected results overnight. What do you need to know? A couple of things. Well, year-on-year revenue grew 15% to $27.12 billion. Their operating profit also beat expectations. Now, what they also announced was a couple of major game changers. Apple and Tencent inked a deal for the first time in history. This basically will benefit both Apple and Tencent. Apple will take a 15% cut of Tencent's WeChat mini games and app purchases. And this basically means, and it sets this game-changing tone for Tencent to start to sell their purchases or their products on iPhones. So this could be a revenue stream game-changing moment for both companies. That's something for you to consider. What else? Well, let's go back to their report. So Tencent reported higher cloud services revenue, including increasing demand for AI-related services, and this is expected to continue. Perhaps this is why Tencent was reiterated as a strong buy overnight by several analysts. But the question is, do you rotate out of some US tech stocks and park some money into Tencent? Well, maybe. Because the technical indicators are suggesting while US tech stocks are on the nose and selling down and are under pressure, Tencent's technical indicators look very different, and it's suggesting that Tencent could continue to rise. I think what is supporting that as well is that Tencent's gross profit is growing at 56%, so very strong. Last but not least, let's talk about DroneShield. DroneShield has been a market darling on the ASX, but yesterday it got pulverized. It lost a third of its value, falling over 30% in one day. That took the stock to $2.25 or thereabouts. It's now down almost 70%. It's down 66% from that record all-time high that we saw back in October. But over the past 12 months, if you bought in a year ago, you'd still be up over 192%. But what is happening is there's been a big shake-up in how much the company leaders own of their DroneShield shares. So what happened was the CEO of DroneShield, Oleg, he basically came out saying that he's sold all of his shares, and this happened in the week ending November 12, and he crystallized a gain of about 50 million. We also saw a rapid increase in other orders or sell-offs, which is what usually happens. After we see a CEO exit or sell his stake in a company, we usually see our retail investors scratch their heads going, hey, what's going on? If the founder and CEO of the company is sold down, I'm going to sell down too. So that's a very natural thing for you to consider. Do you consider selling, because we're going to see some blow-off from retail for some time. But if you read the ASX announcement, it basically suggests that Oleg, the CEO, has sold down his stake because he was exercising options. But people are going to be questioning, have the fundamentals of the company changed? And the answer might be no, because you've got to think about this company. A lot of their revenue is under some ongoing contracts with US governments as well as the Australian government as well. So that's something for you to consider. Also, DroneShield, note that they put out an ASX announcement as well yesterday saying the sell-off basically is not related to DroneShield's growth trajectory. Plenty to consider.